Choppy trading, but Wall Street now in positive territory just ahead of the U.S. China meeting at the G20 on Saturday. For more on the market sentiment, we're joined by Josh Blechman. He's Director of Capital Markets at Exponential ETFs. Welcome back, Josh.
Thank you.
So U.S. stocks sort of seesawing in between positive and negative territory. What's behind this listlessness in trading?
I actually think you just mentioned it, which is heading into the China-U.S. meeting at G20. The market is sort of holding its collective breath as they sort of wait to see a direction. Markets don't like uncertainty, as you perhaps saw earlier today when a Chinese comment perhaps tilted favorable towards some progression in the talks, the market tended to jump. I think that we should see some sideways movement continue until we have some sort of resolution, or at least state of the union as far as what occurred.
And Josh, I noted that defensive stocks tend to be are in the vanguard today, whether it's telecoms, utilities, healthcare stocks. What's that telling you?
Yeah, it's telling us that perhaps there's a little bit of a rotation going on. Not ready to declare that tech's going down and these defenses are going up, but sort of what the definition of cheap has been within the value space is a changing definition, because people who are real value practitioners have been thinking value stocks were cheap for the last 3, 4, or 5 years. And I think perhaps what we're seeing is a point with those names where people are declaring, okay, well, this is cheap enough. And we're seeing in the last few weeks some of those consumer staples, telecom, utilities sectors rally in the face of this uncertainty and the check drawback.
A little rotation. Do you expect it to rotate fully in favor of value after all these years of leadership by the techs?
Not ready to say that quite yet. We do see that this pullback, the depth has been quite drastic, but the duration has been pretty short, and we're not necessarily projecting that it's going to be straight down from here. We're going to wait for more information to present itself on market direction.
Well, some of those FANG stocks, the Facebook, Apple, Amazon types, they're in bear market territory, actually down more than 20%. What do you make of the movement in those FANG stocks and what it means for the markets?
Yeah, so what's interesting is that while they all are in bear territory, they reached bear territory in very different ways, which is somewhat unique for the last 5 years or so, where the FANG trades have been moving in unison. And Facebook has had its series of issues and earnings misses, et cetera. Apple was actually doing very well until some recent questions about the sort of potentials for softness in their iPhone orders. They are succeeding or failing on their own successes and failures as opposed to as a group. But it's important to realize that even though many of them are in pullback zones or bearish territory, for the most part, they're still very positive for the year, with perhaps the possible exception of Facebook. And so on a year-to-date basis, they've still had strong performance, but they've been hurt more than the market during this pullback.
Is it a good thing that they're not trading as a group?
We believe yes. It's with the reintroduction of volatility that we've seen, initially in February, but more so towards the fall. We think that correlations are down, dispersions are up. And ultimately, it's a stock picker's market, and that's a good thing for both investors and for the companies.
Tomorrow's a big day, the Trump-Xi meeting. What are the markets anticipating?
I don't know that they've picked a direction. We've sort of priced in as some of the effects of tariffs start to be seen, real-world tangible effects, like with GM closing its plants, which tariffs played a part of, we've seen the market pull back and that trade has weighed on the markets, but I don't know that anyone expects big moves to come from this particular meeting. Perhaps an extended talk, but there's no clear direction of market expectation.
All right, so perhaps a little uncertainty may still hover over the markets?
Yes, definitely.
And lastly, the big headline, Marriott's data breach, 500 million records accessed, stolen by hackers, the second biggest breach on record. How would you position yourself on, for example, Marriott stock in the light of other breaches we've had in the past?
Yeah, so that number is staggeringly large, as you mentioned, ranking second. And the market has reacted, the stock is down today as it should be. It's going to matter, importantly, what details emerge as far as, are there new details the market doesn't know about? But in the absence of that, I think that it's sort of been priced in, and where Marriott could find itself in further trouble is if this is persistent headlines, the way we've seen with a Facebook, in their data scandals, et cetera. As a one-off, it's still too early to see how much more damage could be done.
All right. Well, thanks a lot, Josh, for joining us.
Thank you very much.
Our thanks to Josh Blechman of Exponential ETFs. I'm Fred Katayama. Have a great weekend. This is Reuters.